Hello everyone, welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of June the 20th, 2016. Now, next week is likely going to be one of the most volatile, periods of the year when we're looking at the Brexit next week. We've got Janet Yellen testimony. Very, very choppy week ahead, which is definitely going to have a major effect on the commodities markets, the equity markets, and of course, the foreign exchange market. So when we look at things, we always want to begin by looking at the US dollar index and assessing where is the US dollar index in all of this. So right now, looking at the key VantagePoint levels, again, we want to focus around the key VantagePoint triple EMA cross. Now, we're still crossing to the downside with our critical resistance now at 94.68. Now, the dollar getting a boost basically from a risk-off scenario, just like the Japanese yen, just like the Swiss franc. Whenever we see the equity markets tumbling, which I'll talk about in a moment, we definitely see these currencies strengthening, but not always the dollar. The dollar has been following on the intermarket correlation, has been following the equity markets up and down. Now, I fully expect these intermarket correlations to break down temporarily ahead of the Brexit, ahead of Janet Yellen, but things will get back to normal in the next few weeks. Now, when we look at the dollar index right now, that key level, we've closed below 94.68. We've pushed above it multiple days this week, but we have closed down. Now, when we look at the additional critical indicators from VantagePoint, the predicted short-term difference, the strength indicator, we're down. The position of the predicted MACD below the zero line, crossing the trigger to the downside. Now, the risk to the US dollar here, guys, towards the end of the week is assuming that Great Britain stays in the European Union, then we'll go back to potentially a risk-on scenario where the equities will recover, the British pound may recover, all of these things may happen, and we could see the US dollar weaken right across the board, except maybe against the Swiss franc and the Japanese yen. So that's something we have to look at here. Now, our predicted RSI going into next week, we're at 45.3, so we're bearish, still bearish here. Our trend line support, very critical area here that I'll bring everybody's attention to. That's coming in at 92.75. That has held the entire week, which I talked about this last week. The dollar has remained firm, so nothing has really changed there. When we look at our individual crossovers from VantagePoint, again, very important to break these down. Our short term is lower, our medium term is still up, and our long term is struggling to make this crossover in this area. Now, this is the benefit, again, of looking at multiple crossover points to identify this. So you can see, for this thing to really turn around, we need this long-term crossover to move to the upside if we're going to see further dollar strength. That is not happening. The additional indicators from VantagePoint, the neural index, we're looking at 30 other markets. Guys, when these forecasts are being done, the VantagePoint software, again, looking at 30 other markets when it's forecasting the dollar index. I'm not sure I know that there's any other product out there that's doing that. So this is what makes the program very useful, and that's what brings it to, for many years now, has been the primary form of my analysis. So when we look further at this, again, we're looking for a break of the trend line resistance or support, and right now there remains a slight bias to the downside. But again, we are entering into a very, very choppy week coming up here, guys. Now, when we look at how the equities are playing with this one here, a lot of talk back and forth, a lot of speculation. I'm going to break it down for everybody so we can really have a look at things from a longer term perspective when we're entering. So you can see that I have two horizontal lines drawn across the screen on the equity markets. Now, if this was a webinar presentation, a live webinar presentation where people were on the webinar, I would ask people to put their hands up to say who sees the same thing that I see, that this is a repetitive move from exactly 1 year ago. So when we look at this, we have a lot of activity going on between 2000 and basically 2120 here, guys. You can see that last year at this time, this looks exactly like it does right now, to the letter, okay? At the exact same level. Let's not complicate our trading right now, okay, guys? When we're going into all these event risks next week, the equities, of course, are likely to move lower ahead of this. But if it's determined, again, that the Brexit is a non-event, the equities could turn around and go higher. But I think that either way, it would just be a relief rally, and ultimately we're going to move lower. You can see that last year at this time we moved into this sideways chop, and then we sold off here into August. I would anticipate almost the exact same thing happening this year. The Fed is not raising rates. We had a dovish Fed, not a surprise in June, but it doesn't mean that they're not going to raise rates in September, October, sometime through into December 2016, which again puts downward pressure on the equity markets. That's just the way this works here, guys. So right now, again, we can see that the predicted short, medium, and long-term differences, the predicted MACD, excuse me, crossing the trigger to the downside. We're below the 40 level on the predicted RSI. Everything is pointing that we are likely to head lower. So this is what's keeping downward pressure on US Swiss franc. This is what's keeping downward pressure on US Japan here, guys. This is something that I've talked about repeatedly over the last several weeks, if not several months, that as we move up into this area here, we're really in a fairly tight channel here. So I would anticipate a bit of somewhat of a move lower, but I would point out one thing right here is that as we approach the lower part of this channel right here, we did have a higher low. Last year we had a lower low. This year we don't. So maybe that could be the needle in the haystack that we're looking for to support the equity long trade. Personally, I think the equities are a house of cards in my respectful opinion, and ultimately they are likely to head considerably lower into the third and fourth quarter of this year. Now, again, a number of different things can fundamentally change that. But next week, guys, we are not trading on a fundamental basis, and we are certainly not trading on a technical basis or an intermarket technical basis. We are in a news-driven market next week. Next week is a week to just stand aside. Let the traders fight it out. It's real money is going to avoid next week like the plague here, guys, because again, real money never trades off of news. They trade off of advanced intermarket technical analysis or advanced fundamental analysis, neither of which is at play next week. Okay. Now, the DAX, the same thing, the European equity markets. We're going to move over to the DAX here. Again, we're still pressuring to the downside, starting to recover back up. As it starts to recover back up, that should see the euro currency weaken. But this is going to happen probably in a week and a half, 2 weeks from now, until we find out what exactly the Brexit is what's going to happen with this. What's the fallout if they did leave? I don't think they will. But again, I would be speculating as to what the outcome of that is going to be, which I'm not going to do at this time. So when we look at our major commodity markets here, we can see oil is failing just above $50 a barrel. It's got a bit of a boost, but now we're moving lower yet again. So this is a problem here, guys, for currencies like US Canada, for shorts on US Canada. If oil is moving lower, we want to look at getting long US Canada. We want to looking at potentially getting short Great Britain US, but not in the midst on Great Britain US with this Brexit. So right now, oil back under pressure. Oil usually remains firm here, guys. If we look at it last year, we look for that peak in oil, and we can see last year we peaked right around this level right here. Very important to look at seasonalities here. And again, looking at this over a year-over-year basis. Actually, I'm just going to clear this here so everybody can see this. Let me bring this back. So I'm at 9 months, excuse me. We're going to go to 1 year. So we can see that basically 1 year ago in these oil contracts, very interesting here, guys, that you can see that basically oil peaked last year at this time. And that was it. And then it slid from there. So does that mean we're going to slide and start consistently moving lower in oil again? I would say that there's a better than 50% probability of that based around the seasonality and the low demand for oil, the oversupply. So if oil is going lower, then chances are Great Britain US is going lower, US CAD is going higher. Now, gold, not surprisingly, has had a recovery in this past week, and that's largely due to, again, a risk-off scenario. There's a lot of fundamental risk in the market here, okay? So when we look at the key VantagePoint level, we've got 1265 is our base level. Now, if the Brexit passes and it's a non-event, gold has a one-way ticket straight down, okay? So it's getting a boost. on the news. Buy the rumor, sell the fact. I hate to use a cliche like that, guys, but this is a perfect case of that. Is there any real world demand for gold? Nah, not really, especially in a US dollar rate hike. So gold has got a bit of a boost because the Fed didn't hike in June, but nobody really expected them to. But they are expecting them to hike again, maybe even twice in 2016, which keeps the downward pressure on gold. So you can see our neural index is a little mixed here. The predicted MACD does look very good. The RSI is recovering, but again, this is not based on advanced technical analysis or fundamentals. It's based on fear in the marketplace, right? It's a news-driven move. So most news-driven moves are very, very short-lived. And that's a very, very important point to remember. Now, as we come into our major currency pairs here, we want to look at some critical levels going into euro, one of the most popular currencies to trade here. Again, we're focusing around this area and our key levels. Our key VantagePoint 18-day predicted EMA is 112.59. We have closed at 112.74. We have closed above this critical level. So we want to make sure we understand what we're looking for. Above it we're bullish, below it we're bearish. Now, again, the euro could have a very positive reaction here, guys, to the Brexit being a non-event. If they stay in the European Union, everything's good again. That would likely send the euro higher. So we're sitting below our zero line, our predicted MACD, and our predicted RSI still mildly bullish here at 53. This is what we look for here, guys. Okay, the strength indicator still pointing higher. This section, very important section from VantagePoint right here, is telling me that we still have a little bit of upside potential here, but it's going to get very, very choppy the closer we get to Wednesday. Okay, we have Janet Yellen testimony, I believe, on Tuesday or Wednesday of this coming week, then the Brexit vote on Thursday. So stay clear of it on those 2 days, okay? Our trendline support coming in at or about the 111.70 mark, critical support which continues to hold, but our resistance area here, which coming in at our upper trend line, is at or about 113.75 right now. We're looking for a break of these levels after the Brexit vote. That's what we're looking for, and basically limiting our trade going into that. Our VantagePoint indicators, we can see that our triple EMA cross they're all piled on top of each other here. We've got 112.55, 112.61, and 112.59. So all three of these levels are basically running flat. That's perfectly normal ahead of this kind of event risk. So right now, if we believe that the Brexit vote, that they're going to stay in, that is actually probably more likely to be euro positive. Now, as we get into some of our more critical pairs here next week, dollar yen, pound dollar, and US Swiss franc, of course, here. So basically you can see the trend line that I've drawn in from last week's presentation continues to hold. Buyers and sellers are fighting it out right around this area. However, we've remained below the key VantagePoint level at 97, so selling into the 97 level still remains the primary, remains a very viable target regardless of what happens with this vote. They stay in, the Swiss franc weakens. Now, here's the flip side of this, guys. There is the potential for currency intervention from the Swiss National Bank next week. If the Brexit they vote to leave, I believe that the Swiss National Bank and the Bank of Japan will intervene here in some form to keep their currencies from strengthening to any real extent. So be careful of this. So they're going to try and run this right now. The 96 level remains key, and the VantagePoint 18-day predicted EMA at 97. These are critical levels we've closed at. Again, 95.87, still predominantly bearish. You can see the market for the entire week is tangled up around the VantagePoint 8-day predicted EMA, which comes in at 96.43. That's been our resistance area for the entire week. Selling into that with my own direct clients, that's what I've advised all week, is short into any rally. Next week, though, potentially you might want to start looking for potential longs here. If the Swiss either intervenes or the Brexit is a non-event, then it's likely the Swiss franc and the yen will weaken right across the board. Okay. Now, as we move into the British pound here, I'm going to spend very little time on this here, guys, and the reason for that is this is 100% speculative. It is not Again, you're not technical trading next week. You're not fundamental trading. You are news trading. News traders do not make money here, in my respectful opinion, because they're gamblers. They're guessing as to what's going to happen with the market. Unless I have a good, strong technical combined with some minor fundamentals, then I'm not willing to trade something. I'm not willing to gamble on something, okay? So our key vantage point level here, we have come right up to it at 143.69. You can see that we've closed at 143.51. I do not believe that that is a coincidence that we have stopped exactly on the key vantage point 18-day predicted EMA, which is this number here. We're getting a boost in here. So will the British pound start to strengthen as they price in the fact that they're staying? And then when they do stay, the real risk here is a quick pop to the upside, and then we plummet straight down. And that's because it's being priced in that this is that they're 80% probability they're going to stay in. So the price you're seeing now may not be a real price, is the case in point that I'm trying to make here. And so be careful of thinking that you have an automatic long trade here. And the reason I say that is that we could be pricing that in right now. That is largely the basis of advanced intermarket technical analysis, as the market is working in the likely outcome of this. So once we buy into the rumor, but then we sell the fact, right? So they're staying in. This is a non-event. We go back to our intermarket correlations. The British pound has an incredibly high correlation to light sweet crude oil, okay? So if oil starts moving lower again, the pound will start moving lower. The US CAD will start moving higher. That's what's going to happen. So right now to start the week, 143.69, that's the area you want to watch. We have a slight bullish bias here looking at the predicted RSI at 51. But again, most of the indicators are pretty flat here. We are coming out of heavily oversold territory. We're starting to turn back up. I wouldn't be surprised if we continue to work in this price higher. But the second that vote comes out here, guys, again, be careful. That doesn't mean that this currency pair is automatically going to go higher. It's actually likely to go lower once we get past this vote, even if it is positive, okay? Same as dollar yen, we have to be careful with dollar yen next week, because you can see we've had a big move to the downside here. Basically, I called this several weeks ago that this was likely to happen. This was confirmed by the VantagePoint software with our triple EMA cross. We can see that our neural index rate here went down. We've been going down ever since. But we are moving into heavily oversold territory. So again, if everything turns positive, even if it's short term next week, the dollar yen will start to move higher. But again, this is 100% speculation. The key thing here, guys, know your levels. That's what I say to my own direct clients. 107.03. That is the key vantage point 18-day predicted EMA. Short while below it, long while above it. Okay, and you can see the dollar yen. Nothing goes straight up and nothing goes straight down, despite what a lot of analysts will talk about. These go in monthly cycles with these pairs, guys. That's what they do. So you can see that we go down here, we go up here, we go up here, we go down there. This is just the cycle of trading here. So right now, people are pouring into the Japanese yen. They're pouring into the Swiss franc because it's a risk-off environment. That could very likely. That could change very soon here, but some very, very good call here from VantagePoint when we combine our indicator, our predicted MACD, and there's our predicted RSI, again, breaking below that 40 level, which I like to use. I look for it to break below 50. Excuse me. Then I look for it to break below 40. That suggests momentum, and you can see from there we went straight down. So this is what we want to look for here, guys. I think that this is, we could potentially be forming a base right here down around this basically 103.50, and we could now money basically could start coming out of the yen and going back into the dollar and into the euro and into the pound because they've overshot the mark a bit here. So be careful of that next week. Okay, is a turnaround. Now, with the US CAD, my bias remains to the upside based around the fact that we are likely moving out of our oil is going to peak in the next 30 days likely, and then it will start its descent US Canada, the Canadian dollar will start its descent lower, which basically means US CAD higher. So right now, 128.91, we've closed at right on 128.91. We're probably going to see some sideways chop. I would be a buyer down to this trend line at the 127 level in all the carnage that's likely to happen next week. Only a break of the 127 area will we really see any real downside on US Canada, but it's going to be very difficult for the Canadian dollar to strengthen in a risk off scenario. And I believe the indicators here are Neural Index taking that correlation to 30 other markets. It's warning us that we're likely going lower. We're below the zero line on the MACD. We can see our RSI has failed exactly on the 60 line, and we're now sitting at 49.2. So this here is, again, a lot of this is Friday trading. You can see this big bar down on Friday. But I believe that basically Thursday's trading, to be accurate, I believe we will retake the 128.91 area very likely. But again, we could see a little bit of a push to the downside if everything is wonderful again on the Brexit, and Janet Yellen isn't too tough on the testimony. But either way, we're likely to move lower first before we move higher. Just be careful of getting short on this pair. Ultimately, it is likely moving higher. Okay. Same with our other two, Aussie US, New Zealand US. This week we don't want to spend a lot of time on analysis this week, guys, because we are not trading a week where it's essentially a technical week or it's a fundamental week. It's a news week. That's what it is. So ultimately, the Aussie right now, the Aussie currency continues to, it certainly is showing signs of life. There's no question about that. But we must break through this trend line area here. 74, basically about 74.60 we need to break free and clear so we can start advancing up towards the swing highs between 76 and 77. The key support level right now, 73.53. We've closed at 73.82. Once again, we're likely to see downside before we get a pop back to the upside. This is going to be a very tricky pair to trade here. We're coming off an overbought signal right here, so this move lower appears to be corrective in nature. But again, Aussie is a currency that does not like a risk-off scenario. Okay, very important that I point that out. So it is going to be a very tricky week for the Aussie currency and the New Zealand. But right now, 73.53 is the level you want to watch. And again, our predicted short, medium, and long-term differences are trying to turn bearish here. So right now, at least into Thursday, we are likely to see this pressure to the downside, not the upside. And again, only a clean break. We want to look at this key vantage point level to continue to stay above 73.53. And we need to break through this upper trend line at 74.50 in order for us to get long on this particular pair. The same will go for, excuse me, here, I'm going to bring this over. And again, the same will apply to New Zealand US. Now, New Zealand US, could we have a top in place up here at the 71.50 area? It's possible. Right now, our key vantage point level is again 69.51. We've closed at 70.34, so we're very close to this level. A break of the 8-day predicted EMA will take us back down to, again, the key vantage point level, which is 69.51. A break of that will see us go much lower. Now, you'll notice my trend line comes right in here, and this trend line is currently coming in at or about the 70.10 area. So a break of 70.10 could actually trigger a very quick move down to 69.51. I think that is very likely to start the week, guys. Now, if these levels, if that key vantage point level at 69.51 can hold, then we can look to start buying into this further. But I think that it's a dangerous play prior to the Brexit vote and prior to the Janet Yellen testimony. Now, Janet Yellen's testimony could trigger a significant dollar strength or significant dollar weakness. So watch her testimony. I believe it's on Wednesday of this coming week. Should be on CNBC where you can watch it live and see what she has to say. But we know that they're trying to prop up the equity markets and push the dollar down. But for now, she hasn't really been that successful doing that. So once again, we have a very choppy, potentially dangerous week ahead. And I wish everybody all the best.